Good day, trader. You saw the daily chart, right? I already explained a scenario to you, and now we're walking through that scenario. The first stage of the scenario hasn't happened yet, so once again, the support zone that's formed for us, let's see if we get support from that zone or not. If you haven't watched the videos up to yesterday, you need to watch them. The analysis is just one part, that scenario, how we act, when we exit, when we activate stop losses is another part. I won't repeat that every day. So, the analysis I post for you here, if you haven't seen it, go watch it, or if you've seen it but don't remember, watch it again. That chart isn't just the daily Bitcoin chart, it's a path I talked about that spans several weeks or months. I even discussed trading up until this year's Christmas. Is that clear for you? Today at 5, part 2 is coming out, the strategy for each spot city. Why do I say my own name like that? Anyway, part 2 of the strategy is coming, so make sure you watch it. There's a view count. Once it hits that number, I'll release the next part. If it reaches that view count the day after tomorrow, I'll post the next part. If it hits the number by next Tuesday, I'll post it next Tuesday. Let's get to our chart. I want to talk about the educational aspect, not about trading or opening positions. I'm not going to talk about that. I want to discuss the educational value for you. When the price moved, it got rejected once. The first time it was coming down, since our volume was decreasing in the red candles, it was likely that we'd get another test. The next time we went for a test, we saw a decrease in volume. Yesterday, I said that for the second test, we should see an increase in volume. If we had an increase in volume, both compared to the previous wave and to itself, the long position it would give us could be a good one. But since we didn't have an increase in volume, the norm is, how yellow is it? The right thing is, we didn't have an increase in volume. Then, at the time of rejection, if we had an increase in volume in the candle, we could have opened a short position. I didn't open one, and I'm waiting for my scenario. I said, okay, I might miss out on one wave up to here, but after this, I'll follow the 180s to open a position. When you get to this level, and the candles start getting rejected one by one, starting with low volume and then the volume starts to increase, this candle itself could have given you an entry. Breaking this bottom could have given you an entry too. But for now, this break wasn't really giving a good entry. Breaking this bottom didn't make much sense yet. Then, when it reaches our support zone bottom, it might give a double bottom entry. This was just for educational purposes. This image, this increase and decrease in volume, it happens almost everywhere, and its win rate is good. It's a really good confirmation, this decrease and increase in volume. I explained more about this in the strategy video, about volume increase and decrease, but I want you to pay attention to this. Even if you don't know what to do in the market, just open the chart and watch the volumes. Just do this. Okay, so we opened the first short position for whatever reason. Whoever opened a short, your first take profit zone is right here. Don't take too little profit here. This is an important test zone. Here, I'm waiting for a reaction, and I'm also waiting for a bit of a range in terms of time, maybe a fake out. I'm waiting to see if that happens or not. If it does, we haven't dropped much for Bitcoin. Not that it has to happen, but we haven't dropped much for Bitcoin. We had a sharp drop, then a pullback, a correction, and now another drop. If this drop can't continue the previous move, we'll have a strong weakness in the downtrend, meaning the seller's strength has really decreased in our low wave cycle. The first sign of a trend change we see, we'll open our position. Why do we decide to open a position in the low wave cycle? Check out yesterday's analysis. Yesterday, I made some conclusions for you. For now, the market is moving in its low wave cycle. The effects of the high wave cycle and the medium wave cycle aren't present in the market. The effects of our big wave and medium wave aren't in the market right now. For now, those who trade in the big wave aren't present. They're not making any decisions yet because their triggers haven't been activated. To put it simply, so it's easier to understand, okay? That's it. We're tracking things in the low wave cycle on the 4-hour chart. If a candle forms here and another engulfs it, and we get a range on the 1-hour or 15-minute chart, a trigger level might form. But if that doesn't happen, and it comes to this level without a line, or if it does and shows a reaction, or forms a box for us, no, not at all. If on the 15-minute chart it comes up to 113, and then on the 15-minute or 2-hour chart it makes a higher low, and then you want it to break that, these things happen in the low wave cycle. These are our setups. What about short positions? Now, I'll move to a higher time frame. I like this concept, so I wanted to explain it first while my mind is sharp so we can understand it well. I'll move to a higher time frame and we'll check it together. Okay, what about the short position here? Let's see. We have a level here called 108,000. Now, it could come down a bit lower too. $108,000 isn't a breakdown. Losing the trend line and losing this level means we should close those long positions we've had from lower down. As for the spot positions I bought from lower levels, I'm not closing those for now. I'll hold on to them until 100,000. I'll keep those until 100,000. Why am I holding those until 100,000? What's the reason? I need to see a change on the weekly time frame. For example, if on the weekly it comes down to 100,000, let's see if it starts making lower highs. Then, on the next move, I'll let them go. I also have a trigger that, if I made a mistake, I can buy back the spot I sold up there. For example, the ones I bought in spot, I'll hold on to them until this level. But those futures positions, yesterday I was talking about them, and you really need to pay attention to those yesterdays. If you missed those, I was saying some really important things, and repeating them just doesn't have the same impact as the first time. I have to admit that. Why am I closing the futures positions? Because if it breaks here, even if we want to turn bullish again, we'll spend some time ranging, and I don't want to keep paying funding fees during that period. Let's put that range aside for now. Let's look at the weekly chart. There's this saying that all wicks get filled. No, not always. There are always some phrases stuck in my head, like all gaps get filled, all wicks get filled. These are just sayings, like all technical analysis tools. Sometimes the wicks do get filled, like with this candle, and sometimes they don't, like with this one. It's not something you should base your whole analysis on. It's just another probability. Yes, it's possible that the wicks get filled, but it's not a certainty. If it works in your strategy, give it weight. If not, don't. That's all. There's no such thing as a golden rule or something set in stone in technical analysis. So don't get hung up on a few phrases or become obsessed with them. Like September is bloody or October is bloody. These are just sayings. You get it? These kinds of fixed phrases aren't really anything special for you as a trader or for me as a trader. Every day, we have a limited range. This range is really important for us. It's a range that really shouldn't be broken because it gives us a chance for profit and a chance for a retest. But on the other hand, the data and rates coming out globally could turn the market into a risk-on environment. What does risk-on mean? I told Saman to make another video, with motion graphics and all, to explain it in simple language so everyone can understand. But basically, if rates go down, inflation is expected to drop, the US government is set to reopen, wars are easing up, let's see if they really do or not, and gold is about to correct. All of these are signs that the market is shifting to risk on, meaning money is about to flow into stocks and riskier markets. The market sentiment is telling us this. The reason I'm holding back a bit is to see whether the market actually turns risk on or not. Because when the market does go risk on, the initial move is usually very sharp. Typically, when it suddenly becomes risk on, the first move is really strong. It's not like, okay, let's just watch and see if it's risk on or not. No, the first move is sharp. On the 4-hour chart here, I've already talked about these setups, so I won't go over them again. In this move, look at what Bitcoin is doing. It had a downtrend, it's correcting. Can I move this line? Yes, I can move this line to this level. What about this lower one? Can't move it? Actually, even this one can be moved. The support zone in this area has changed. Here, we're moving inside an expanding triangle. As long as it doesn't react significantly to this 5.69.2 to 5.98.4 range, you can't say, okay, the pullback is over, the downtrend has started. We need to break out of this zone, either break above 59.90 or break below the higher low at 59.62 and confirm above 60. If not, this area doesn't give you a clear trend to identify. What should we do? We have to watch candle by candle. Right now, this candle is green, but Bitcoin's candle is red. If you're holding a sell, what are you doing? The whole market is printing green candles. If you're holding a BTC short, what are you doing? This one is also printing green candles. So, for example, in a bullish trend, we don't just take this indicator and say a sell is better than Bitcoin. You really have to look at it candle by candle, okay? BNB, for example, I gave the signal here yesterday, Arbitrum gave the signal, then it hit the stop loss. I didn't do anything with it. I got stopped out, didn't secure any profit, didn't have a risk-free position. If it hadn't hit the stop, I would have done something, but I just remembered when I saw it, so I thought I'd mention it. That was before the Bitcoin analysis was opened. Total is in the same situation as Bitcoin. We shouldn't lose this 3.68 trillion level, and this higher level became a good trigger at 3.9 trillion, but it's way too overextended. You have to look at Bitcoin and say this level became really important, because before breaking this level in an overextended move, we should see an increase in volume. That's when we open a position. We don't wait for this. Like I said, in the low wave cycle, we get in earlier, find a position here, and open it if the conditions are right and we see a trend change, whether it's with divergence, a fake out, making a box and breaking it, or even forming a double bottom. Any excuse for a trend change in the low wave cycle, if you see it, you can go ahead and do your trades. 2 is in a better position, and altcoins. Why? Because with the dominance dropped, altcoins to our important level 1.61, and the next one, we track them sooner. Total sum is also in the same situation, no sign, hey, go buy, proof for buying. There isn't. This isn't like when you'd say, at the low of the wave cycle, you changed the trend and acted. Why? Its high wave cycle is in a downtrend. Its medium wave cycle is in a downtrend. Its low wave cycle is in a downtrend. The medium wave cycle resistance needs to be broken before we can talk about entering and buying. Its situation, chart, and trend differ from Bitcoin or some random altcoin up there. Its trend is different. Okay? Honestly, today I'm talking really fast. Can someone tell me why? A point just came to my mind, guys. Just like I post Bitcoin trades every day, now for almost 2 weeks I've also been posting altcoin trades daily. Every day, I'm sharing news analysis for you, so you have both the technical and fundamental perspectives. Sometimes I post it a day before, sometimes a day after. Just keep up with it, take a look, and see if it's useful for you or not. I felt that I needed this in the market, so I even asked for this to be done for me at least, so I could sit down and watch it myself before analyzing Bitcoin, to see what the global fundamental situation is like. Because to assess the risk-on environment, only the news tells me if it's about to become risk-on or not. The chart shows me if it's already risk-on or if it's happening early, but the news tells me whether I should be looking for those signs or not. So, I personally felt the need and asked, please post this every day, and thankfully, it's being posted daily. If you're interested, go use it. Just search on YouTube for New CT Pro, uct.d. Any ceiling below 4.97 is suitable, really suitable. If we want to look higher, it's like, okay, let's do a test up to 5.94. If you're really saying, let's go for a test up to 5.94, that means dear Bitcoin is coming. If dominance is bullish, Bitcoin can go up to 99. This is dominance. If it's bearish, Bitcoin can drop to the weekly level. Didn't you see it? On the weekly, it's showing this. Does that mean we should go and sell everything right now? No, I already gave you another scenario and told you how to behave. Let's not act impulsively, let's make the right decisions. So, what's my plan right now? For now, waiting. Waiting for what? To see if we're going to make a lower high here. So, where is here? Before it hits 4.8, why aren't we talking about this spot? If we get here, the chances of things getting emotional and this move happening here increase up until before the 4-point mark. If we make a lower high, you can look for a position in the low wave cycles. But if it comes here, you really need to get confirmation of your trend change. You can't just rely on those small signals anymore. The trend is very strong and has started. Same goes for the other side. We have to see if this trend can continue or not. You really need to be patient here. I already talked about the short position in this area. After 108, I'll keep tracking it. We'll take the same position, get our profit, and then start a new financial cycle. We'll start the new financial cycle and then see if it gives us the short position or not. Or, for example, maybe it suddenly peaks here and all our short positions get stopped out and it goes all the way up here. Well, then we'll go back to tracking the long position again, okay? What does that mean? For example, you see the dominance is green, but you're showing red. What does that mean? It means that the change isn't because of its own behavior, but because of Bitcoin's behavior. Your behavior is changing because of BTC, not because of its own actions. With this higher high and lower low, usually a pattern forms. We've talked a lot about this in the tutorials. It needs to continue. It needs a lower high in order to justify opening a position. or it needs to break this lower high, this support, or it needs to drop sharply, which doesn't really make sense. It doesn't give you a reason to do anything. If you set your stop loss, it won't help. Whenever you see this higher high and lower low, it means the chart still needs to correct itself moving forward. Now, what if it comes and makes a lower high again, then a higher low? Nothing, it just means the chart will probably move into a range box for now. Don't pay attention until it creates a breakout trigger. I'm still talking about Ethereum. If it wanted to break 4723, don't be without a position. This level, this 4700, if it wanted to break, don't be without a position. Don't be in that position. That's the level we wanted to break. If we get down here, in these four levels, we made a higher low on the lower time frame, so we caught the trend change and are following up. We didn't make it. We were here and went up, and at 4,544 I updated you. Our game changes. Thank you so much for sticking with me up to this point in the video. On the 4-hour time frame, we need to see if we make a higher low or if we get support from the previous low or not. The downtrend that has started is a strong trend. If such a strong trend can't continue, it shows the sellers are getting really weak. But if it does continue and closes below that 108 level, we know what our scenario is and what we need to do. Even if we've made a wrong call and lose the support and go below that level, we'll close our long positions or stop our buys. All these things can be made up for later. We can always open a new position again. The movement is the same in the low wave cycle. If you pay attention, on the 15-minute chart, you get a double top, it breaks, and the wave starts. So pay attention to this. On the 15-minute chart, you get a V pattern and the move begins. But 15 minutes does not equal the low wave cycle. We're waiting for a reaction in the low wave cycle. There's a high chance that the reaction will happen during the US session around 4:30. Until then, if we want to hold support here, well, what if we don't have a position from down below and want to take a short position? I explained to my friend that right now, the stop size here is big, so the risk reward isn't giving you a good entry. There's no need to rush and open a random short position like you're gambling. Wait until you get a proper setup, and then if you want, you can follow up on it. At 5 o'clock, after the market, the second part of my strategy video will be uploaded. I'll see you there.